Hi, I'm Char Hu. I'm CEO of the Helper Bees, and we have another episode of Voices of Long-Term Care Insurance. Super happy that we have Robert Eaton in our offices here in Austin, Texas. Robert is Principal and Consulting Actuary at Milliman. He calls Tampa Bay, Florida his home. Fun fact, I met Robert pretty early in my long-term care insurance career, and he has turned into a great friend and really a great advisor to me when it comes to all things long-term care insurance and branching beyond just sort of the actuarial perspective. So I'm very excited that he is here at our podcast, especially here in Austin. So thank you, Robert, for joining us.
Yeah, I'm glad to be here. When did we first meet, actually? Was it the Long-Term Care Medical Symposium?
No, it was formally first met at the Global Insurance Symposium in Des Moines, actually.
Right. That's right. I remember that.
We chatted there, our first real conversation there.
Probably our mutual friend Shauna put us in touch.
Yeah, mutual friend Shauna and Tim, I think.
That's right.
So we haven't chatted a lot about this particular podcast. It's new, but the goal here is to just highlight some of the luminaries that I'll call within the industry who have not only shaped where we have been, but where we're going as an industry. We're trying to learn their story, their origin story more appropriately, and then really where they think and where they bullish about this industry that I think is really important when it comes to our broader society as a whole. So first question for you, just tell us how you got started in long-term care insurance. Was it something that you've always wanted to do, or did you sort of fall into it?
Yeah, that's very kind of you, by the way. And I got started in long-term care insurance not through some personal story. I know a lot of people are kind of drawn to the field from something that's happened to them, but I lived in Boston back in 2009 or so, and was looking for a job because my role at a health insurer I felt was starting to wrap up, and I interviewed for a job at John Hancock, and all the great folks there in their long-term care unit. I spoke with a lot of them, and I was really compelled to seek that job and to go take that position. So I cut my teeth there at John Hancock in Boston in the Back Bay, and I haven't looked back since.
What's it like, or what was that impetus to go from a carrier into striking out into being a principal and consulting actuary, where you got to work with tons of different carriers as well as other companies?
Yeah, I mean, that's kind of it.
Oh, right.
But there's quite a lot of things I love about being a consultant. And in a sense, working for a carrier is kind of making a different widget, right, than working for a consultant. When I work for a carrier, my stakeholders are policyholders and shareholders and regulators, and I'm making a product that hopefully people value. When I work for a consultant, I do have, or as a consultant, I have the ability to work with many carriers. Yeah. My stakeholders are kind of all of those clients, but really I get to sort of work for myself, work for the great folks at Milliman and have a team there. And the thing that I love the most about our job is that, my job is that we're so independent and we can kind of seek out anything that's going to provide value for clients, that provides our own revenue at Milliman, but as ways to kind of serve others, and I love it. And really, there is no limit of what we can do.
You hit on something that was actually the reason we wanted to start Voices of Long-Term Care Insurance, in that we're going around, we as let's say vendors or consultants,
Sure,
or providers, and we're talking to a lot of different carriers, and there's a lot of really interesting individuals. I think if you do it right, you're getting in to understand that particular carrier's challenges, but also how they got there. And as we started seeing all these different conversations pop up, just given our purview, we wanted to bring it together in one spot. How have you seen that as you started to see that the industry evolve both within the carrier and now outside it? How are you just seeing the industry evolve in general? Where do you think it's heading?
My impression of the long-term care industry, since I've been in it, like in 2009, like I mentioned, long-term care insurers have mostly been financial institutions kind of historically. They don't really view themselves as healthcare institutions.
Yeah.
And I think that makes sense. They were companies that offered these really long-tailed contracts and had the capacity and the structure to make those promises, those 50 and 80-year promises. Those are not really the promises, the guarantees that companies like health insurers tend to make. They're like one-year kind of contracts. And so that distinction, I think, that drove a lot of companies, financial companies, to get into this business. They viewed this as like a med sup type product, kind of feels a little bit like an annuity. I think that's really changed over the last 15 years. I think that those companies who kind of viewed this as purely transactional, or kind of staring at the tsunami of claims coming ahead of them, and they're like, we need to pivot, right? We need to actually address, the oncoming claims. This is far more than financial, and there's a lot that we can do for the betterment of everyone, if we do this right.
Yeah. So I had heard your name before we met at GIS in Des Moines. I've seen Robert Eaton's name all over long-term care insurance, either on symposiums or conferences. So you've got a good sort of perspective over the industry. What stands out as one, two, or however many milestones or developments that you thought were sort of critical to where we are today, that have either formed your opinion of the industry or your thought process, or just stand out to you within the industry?
So a couple of things. I mean, if I can get actuarial for a second, we had to actually hit a couple of walls as actuaries. We had to hit a couple of, I'm going to call them assumption walls, where interest rates got so low, historically low, that we never would have believed it, 30 years ago, or it would have been hard to believe. Lapse rates, voluntary lapse rates, got to almost 0%. These may not be really important to policyholders and claimants, but for the actuaries and the risk managers at companies, like those kind of events really mattered, because we could pivot to focusing on things like morbidity, things like healthy mortality, how long people live, and put maybe more emphasis on understanding that better. And that's why the current, the current deep emphasis in trying to understand morbidity, cost of care trends, it was always important, but now I think kind of the tide came out on a couple of other things and sort of exposed these things that now we get to focus on.
Do you think that's changing right now, depending on when viewers are listening or watching this podcast? Right now, interest rates are going up. Do you think that the tide is going to cover things back up, or is the tide receded forever?
I think it's generally receded forever, in part because the standalone long-term care insurance market is still pretty dry.
Yeah.
And so mostly a lot of us are talking about working with the 6 or 7 million private long-term care insurance policyholders in the U.S. And I do think kind of interest rates are going to still take a backseat to other really important topics. Now we see it's 2022. In 2020, 2021, we saw pretty unprecedented increases in the cost of providing home health care.
That's right.
Actually, we saw that trend since 2016. It predates coronavirus. And, I think we're going to be focusing a lot on that sort of thing, over the next 5 or 10 years.
As a consulting actuary, as an actuary in general, I don't always know what an actuary does, but I think what I've seen you craft in your career over the last several years is taking traditional actuarial analysis, but really marrying it up with what our industry calls wellness or provider services. Can you tell me about that transition? Is that sort of, from the outside looking in, that's what it appears like you are doing, where not only with your risk models and some of the other innovation you've done, is that what you're doing, is taking traditional actuarial analysis and applying new techniques to it to push the industry forward?
I think that's the motif on a general theme. My theme has been, for the last 8 or so years since I've joined Milliman, making long-term care kind of an understandable and an insurable risk again. Because I get the sense that when we're able to make long-term care something that insurers understand, that products are just going to flow.
Yeah.
And not just one type of product, but tons of types of products. And so, a shameless plug for a new book that I'm editing that's coming out, in the next 5 or 6 months or so on insuring long-term care through Actex is, the goal of that book, though, is to expose all of these topics, to make sure that people understand them fully in the sense of serving a market, to create a market that we have a lot of financial products. But one of the things that goes along with that, I think, is what are the next generations of products going to be like? What are they going to look like? And we've seen a lot of aging in place and wellness focus in the last, 2 to 4 years. The Long-Term Care Tech Summit, right, in Sunnyvale, I think in 2018 or 19 or so. I think that signaled to me like kind of an uptick in the interest there. Since that kind of gets started, I see those elements of proactive claims management. It's really easy to build those into future products. So
Yeah.
I do really see all of this kind of weaving together.
That's interesting. We play a lot on the claims side of things within our company, but you just brought up a point that I'm not always aware of, which is the innovation that we're doing on the claims side. It should and could feed a lot of product design. We're just now starting to see carriers asking us about that. Are you fairly confident that that trend will continue, and you're going to start to see the result of which you'll start to see new products, new innovation within the underwriting space?
I have to imagine it will. I think it's going to start small. I think it's going to start with the baby steps of including a rider on an existing type of policy, if that's a hybrid policy or a short-term care or long-term care policy. Basically, building a bigger sandbox within existing policies to have these sorts of programs and benefits, not just as a value add, but ultimately as something that provides real value, real ROI to actual policyholders and insurers.
Yeah. So I want to switch to the data side of things. We recently had some folks over from Prudential, John Sieb and Rhett Weiland, and they talked a lot about the predictive modeling capabilities. What are your thoughts around this when it comes to either on-claims, pre-claims initiatives, or both? Are you really confident that we have the data sources that we need within long-term care insurance, which has historically been fairly data light when it comes to digital data? Do you feel confident in the models we're able to build today, and will they inform increasingly better models tomorrow?
Yeah, we're starting from a pretty low benchmark, like you said, pretty data light. Even our Milliman long-term care guidelines, these industry benchmarks, they have billions of dollars of claims. But I think if you compared, that data set and maybe the Society of Actuaries data set, some of the largest in the industry, to like 1 year of health claims, it's nothing. We have very little data compared to what a lot of other actuaries are working with. So there's a lot of room to improve, and we've started to build predictive models that pull in other data to help us make better estimates than we can do with only kind of cleaned insurer experience data. At the same time, with kind of great power comes great responsibility. We've got models that we feel are pretty accurate, but we rightly get a lot of questions like, are we doing this the right way? Are we making sure these models aren't biased? Are we making sure that we have the appropriate uses of these models? Are they being used in a correct and appropriate way?
My sense is even asking those questions indicates real thoughtfulness for our industry, and it makes me feel good that we have smart people asking these right questions. I hear a lot too of not only the bias issue, which honestly more data will help prevent that, but sort of a hesitancy on some with third-party data, whereas I could say at least from health insurance, which is an easy analog, uses third-party data quite a bit. I'd imagine other health insurance products as well. Are you really confident in the third-party data sources providing utility to long-term care insurance?
We find some that provide more utility than others. I think data sources that actually give us cues as to policyholder health, if that's prescription drug data, if that's, medical records of such. For folks who are on claim, we find that bringing in that other information gives us much better estimates about the profile of that claim.
Yeah.
And my belief is that if we're able to take some of that data for people not yet on claim, we'll get a much better understanding of, who are the most risky among them, being able to stratify those folks who are not yet in a claim state.
Yeah. All right, last question. So we're 3 years from now, I invite you back to Austin. We're sitting down. We're going to talk about the last 3 years and trends. What are we talking about? Where do you think this industry is heading that perhaps we could do now or over the next 3 years that we couldn't have done in the previous three? Where do you think we're headed?
I think delivery of policy and delivery of claims is going to be totally transformed. Hopefully it'll be here within 10 or 3 years, maybe not. But right now, I think if you look at how someone buys a long-term care policy, even a hybrid policy, which are currently the most, advanced and current long-term care policies, Mostly a paper application, probably. Maybe you're in an agent's office and they flip the iPad around. You can enter the
Yeah.
application electronically. You're paying premiums sometimes through a credit card, but oftentimes you're paying premiums, with a monthly check or writing down your credit card on a piece of paper. So just delivery of the policy itself, I think, can be far better automated. You look at life insurance and PNC. The tech startups there have really taken over.
Yeah.
I don't need to get into all their names. We just had InsurTech Connect
Yeah.
in Las Vegas last week, and it's or 2 weeks ago, and it's, that landscape is totally transforming. So I'm optimistic there. And then finally in claims delivery, and actually providing benefits to policyholders. I think that's a pretty painful process right now.
Yeah.
For a lot of people. And I think there's a lot of folks trying to crack that nut. Some of the consolidation in our industry, I think, can actually speed that along. But at the same time, I think we have a ways to go on the tech frontier to be able to pay those claims with ease, and give people a really comfortable experience. So I'm hopeful that those are going to be the two things we think about in the year 2025.
Yeah, hopefully.
Yeah.
But, well, I want to say thank you, Robert, for not only joining us here in Austin, but you've always helped me, and I'd imagine the rest of the viewers through your conferences, help make actuarial analysis more palatable and understandable, and helps us transform it into a way that we can help innovate. So thank you, and thanks for being on the podcast.
I really appreciate your bringing me here, and I love what the Helper Bees is doing, as you know, and I'm really grateful to be able to sit here with you.
Great.